Hope everyone is doing great today. So today is going to be some investing ideas for August, as well as just some thoughts for August 2 here. It's August 3rd, just for a timeline reference on the thoughts, because we all know a lot can change at about an instant in the stock market and economy somewhat too. So if we look at the S&P here, we've had quite a rally off the bottom, June 16th. We've had quite a big rally. It's very interesting. I think we're still in the bear market. I think it's a bear trap. I also think part of it is people that were really heavy into cash, like maybe even didn't even own like any real equities at all, are positioning themselves now just a little bit, like just dipping their toes in just a little bit in case. I think in my case, I think I personally I put some in now for a few other reasons. I won't, it's because I won't get into it, but I found out up in Canada here that I can buy US, like popular US stocks in Canadian dollars. So I avoid the currency exchange and the FX fees. And I can also, it's like a stock split of, Amazon or Bank of America or whatever. They're all 20 or $15. It's interesting. But anyways, we'll skip past that. That's just my own personal stuff. So yeah, we rallied a lot off the bottom, and I feel part of it, like I said, is people, all the people that were kind of cash heavy are putting some money in, because there was a lot of cash out there. I haven't heard about it in a while, but there was a lot of cash out there. So it's interesting. Again, I feel it's a bear. It's not a bear, a bull market, a bear market trap. Sorry, guys. At the end of the day, like we just have too much economic uncertainty, and I'll get into it. Like the Fed, like and rating, they've been going up and down like crazy. Down mostly, like we were up at the high was 3.5. So worried about this. I got a new computer and this one sucks. I didn't get a new one, but my old one broke. But anyways, so the rates are just going crazy. And today was James Bullard, a Fed voting member. Yesterday it was two Fed members or three. And they've said that no, we are not pausing. They're like fighting what the market is saying, and saying effectively that they're not saying it directly because they can't, but they're saying effectively that the market is wrong. We will not be, cutting rates, and we're not slowing down, as well as what James Bullard said. James Bullard came out very hawkish. It was very interesting. And yet, if you look at, I think I'll look at on my phone here. I won't pull it up because the internet is so slow, but low, like yields at first they kind of spiked up when he said that, but they finished like relatively just almost flat. Like, yeah, pretty much just relatively flat here. I don't know what the 2 year did. That's the one you want to follow, is the 2 year. But and we're sitting, just it's fascinating what's going on. I think part of it, like just the rates just going absolutely crazy, like volatility is what's very fascinating to me. We're sitting at 2.748 on the 10 year right now. So it's so fascinating, to be honest. It really is. I think part of it, like I was going to say, part of it is definitely the Fed selling off the balance sheet, and that's really going to kick up at the very start of September, end of August, I believe it is. They're really going to like start truly selling off the balance sheet. And some people, James Bullard also fought back on that they were gonna have to stop selling off the balance sheet by the end of the year. He also fought back on that because some people have been saying they won't be able to. It's very, like, these are such fascinating times, to be honest. It's very, very dire, if inflation, especially, something very bad could happen. And that's what I'm really worried about. I can't tell you what, because I can't, but like something very like stagflation is a very real possibility. That's what I'm really worried about. Stagflation, and also the Fed simply just breaking something by hiking too much, and also just let alone going from zero for 2 years all the way up to we're at 225, 250, as you can see here. It's very, very interesting times. Like it's really crazy. There's so much just unprecedented things, like, everything. And then we have the labor market still somewhat strong. Well, I say somewhat because obviously one has to slow down, obviously, from the interest rate hikes, but it's still very strong. and we're going to get a good read of it on Friday. Today is August the 3rd, so it's Wednesday, but I think we're going to get a good, really good read of it on Friday. And every single employment report now is going to be a huge focus. It's going to matter a lot more all of a sudden. Same if it's going to matter just about almost as much as somewhat as much maybe as inflation. Obviously, inflation is the big thing, but even then, like people are, expecting inflation to have come down because of all the commodities coming over, rolling over and stuff. But it's someone the other day, they said, this is just one person, I just like to pick out random people's opinions, but he said that this, the fall in commodities is going to be transitory disinflation. And the transitory disinflation in commodities this is what it is. It's very fascinating. Oil, obviously, oil is, well, it's the main one you can really track. Housing market, unfortunately, rents, regardless, are going to continue to rise. It's awful, but rents are going to continue to rise. For now, I just did and mess around, in the energy markets too. I think he is personally, I mean, he has, but he's playing around with the energy. He himself, dare I say, I've theorized this a little bit. You should never in a million years bet on this, but I think he himself is going to keep the price of oil high, because why wouldn't he? He can control it. If Russia quits producing oil, all of a sudden, like, oil would go to 400, 500, 300, whatever. Like, it would be insane. Like, we would have truly a shortage. It would be scary, to be quite honest with you. But obviously, like, Russian oil production, and he has increased it and decreased it. The latest numbers showed a decrease in June for their exports of crude. I think he is personally playing with the markets himself, and if the markets go low enough, he'll just slow Russia's production enough so that oil stays relatively high. And why wouldn't he? He hates the United States. He wants, and the West. He wants them to suffer, and he can continue to sell Russia's crude at a discount to the Chinese and and India as well, and all the other countries that want Russian oil, Europe included for now. That's also something else. We have the seaborne ban and a few other bans. Well, I think like a pipeline, official pipeline. I can't even remember what at all, but I know it's a seaborne ban for sure coming from the EU in December or so at the end of the year. So we'll get into some more investing ideas. We'll get into some investing ideas. I haven't done this in a while, guys. I'm a little bit rusty. It's great. You can't deny it. It's got a dividend, low PE. At the end of the day, you can hold this forever. And most importantly, though, it's come down so much. Like, it's come this. So that is, we don't have to think about earnings for another, 2 months, I guess, call it, or so, whatever you want to say. But regardless, we don't have to worry about that's earnings is behind this. We got a dividend increase about a month or two ago, I think, for the stock. I don't quote me on that, but nonetheless, I think we did. All the banks kind of increased their capital return to shareholders. And just overall, just kind of financials in general. I just picked out Bank of America because I like them personally, but really just financials in general. You have interest, I know it's simple, but interest rates going up, and banks get more money. Obviously, a recession would not be good at all for the banks. And I think a recession is going to happen. But you could argue that I feel a mild recession is definitely priced into the banks. And look at the labor market. Like, that's the thing. Just look at the labor market. That's the thing. It really is just the thing, is the labor market. But keeping us out of a recession. But we'll look at JP Morgan as well. But again, just the financials. These are here. If you just look at, their max returns, they're just great companies. You get, honestly, it's a generational buying opportunity for this, and we'll get into it here, but as well as big tech. Even if the market goes down from here, like, significantly, add some more, like, seriously, or more with Bank of America and JP Morgan. That's me personally, but like, these are like the best companies in the world, and not only the best companies, but simply the best stocks. That's kind of what I mean too by, the best companies. But like, you think, like, look, where's the 08 crisis here? Obviously, it's not comparable at all. The stock drop, but nonetheless, like, you think with some of the significant decline that we've had, you would think that we've had something just awful happen. But we all know what's happened so far and stuff. But nonetheless, definitely a lot of bad news is priced in here for sure. And these are, like, again, Like same with Alphabet here. I'll move on. But really what I would recommend strongly is quality companies, ideally the best, not the best of the best, but quality companies, low-ish, I say. Still wouldn't touch the high flyers or the ARC ones, even though they've had a run recently. Like Google, absolutely great company. It's big cap tech and it's come down a lot. It's just a great company. Growth. I mean, it's Google. You have YouTube, you have everything. Google search, all the ads. They've been in, well, everybody was worried that with Snap first reporting, and just worried about digital advertising with Google as well as Meta. Meta, I'll touch on it a little bit. I just still don't like Meta. I haven't liked it for a long time, to be quite honest with you guys. I wouldn't touch, like, I get the low PE and everything, but I just wouldn't touch Meta. I haven't for a while. It's, yeah, I won't get into it too much because that's not the topic. It's not something I would recommend. So only issue with, well, I guess maybe two issues with, obviously you could absolutely 100% say that that it's worth that premium. And it is. That's why it has it through this bear market too. Really good, but it's held up relatively well considering everything. And it's held its PE too, and it's got growth coming. But again, I know I shouldn't, it's not really an issue because they just gave guidance, but my worry is for the big thing was the list and the market was expecting. And I'm just like 2023, that's 6 months out. A lot can happen between then. We've seen companies a month or two, like a month in the case of Snapchat. That's just one anomaly. But we've seen companies easily take down guidance. It's happened lots. And that's my issue is what happens if Microsoft, takes down that 2023 guidance and lowers this stock would get hit for sure. And as much as I love Microsoft, I really love the Activision Blizzard acquisition too. It's going to take a while to go through, unfortunately, and it's going to have some trouble with regulators and stuff, but nonetheless, the company, you get a tiny dividend. I actually am a shareholder of Microsoft as well as Alphabet, pretty much, somewhat pretty much all these companies, at least Bank of America, JP Morgan, Alphabet, and then we'll look at just Devon Energy. I'm not a shareholder of this, but energy as well. I'm not recommending it as much as the banks and big cap tech. And then energy would effectively be my third pick. I know between the banks and big cap. Banks would be my first. Big cap tech would be secondly. I don't know. I'm still a big bull on energy, but I've definitely, just if the price of oil action back today, 100,000 barrel a day increase. That is nothing. For those who don't know, 100,000 barrels a day, as much as it seemed like a lot, that is nothing amount to what the world needs. That's what OPEC agreed to after the Biden visit as well, because it really shows, again, as I thought, and as it proves that they don't have. So we have it's still a really tight oil market. Demand is the big issue. That's why we're seeing, the price of oil do what it does, and obviously recession fears for sure. We're sitting at $91 the barrel currently. If we break below 90, it's going to be, it's not going to be good for energy investors. For inflation and stuff, it will be good, but I took off some energy because I just wanted to reduce exposure to it and actually gain exposure to just like the banks and big cap tech. That's what I did with that money. I took some of it out of energy. I still have a lot of energy, but I took some out just because of the recent price, really the price action in oil. That's really it. And also just demand, like the demand numbers are a little bit worrisome in, the general economy and stuff, but nonetheless, still a big bull on oil. But again, I know I've had them before and it's been a while, but I feel you really have to be nimble. You got to adapt and you have to be able to change your mind. You really do. If you guys want to look at, well, Devon there, great company. I like them, massive return to shareholders, but we have CPG, and then the other one is the other ticker is OBE. I've kind of talked about them before. So yeah, again, I'll just go over that again briefly. So first, I would pick off like the banks. First of all, we'll definitely have a mild recession priced in. Obviously, if we have a recession, they're going to go down some more. Maybe like big recession, a deep one, they're definitely going to get hit a lot more. But again, I would add to them because you don't get these chances to buy like the banks. If you get the max charts, like and they always go right back up eventually and just make new high PEs. And then second, it's basically somewhat the same. Obviously, there's a lot more reasoning behind that too. You've had this big dip off, it's just a great time, especially in these quality companies, unless something like fundamentally something like Facebook, like something or Netflix, again, just buy them if they go down, especially if they go down a lot. It's just a great generational trading, and short-term trading, even medium term, is a whole other basket. Long term, though, 1,000%. Something else briefly is natural gas. I would throw that in there too. Everybody focuses on oil a lot, but really natural gas companies, great, great. I would recommend those as well. Before, I would actually, I would go before oil, yeah, or oil if you can get. And it's not as common, but still, there is definitely a lot of natural gas companies out there. But anyways, sorry, I'll just wrap it up there, guys. I was gonna say sorry about that because I'm a little bit rusty for sure. It's been a long time since I did this because my computer went kaput, unfortunately. But I hope everyone, and I was doing good, and I hope everyone enjoyed that and take care.